Hi, Stock Explorers. Welcome to Explaining Stocks to 5-Year-Olds. Today, I am joined by Kweku Obed. He's the managing director at Marquette Associates. He's also on their board of directors, and he is an author of The Stranded Fish, The ABCs of Financial Literacy, and The ABCs of Financial Responsibility. Thank you so much for joining us today, Kweku.
Oh, that's great. Thanks for having me, Nicolette.
No, anytime. I guess to kick it off, what sparked your initial interest in investing?
Wow, that is, I would say, like many things, it comes from the environment that you're in. I feel that I was very lucky. My parents were ones to always explain, the cost of things, but in a very positive and constructive way. I had an allowance, I want to say around the age of 6 or 7. So all these things really just got me thinking around, what things cost and all of that good stuff.
I think that's absolutely outstanding. And then I guess, how did you get your foot in the door into the industry? What kind of kicked that off?
Yeah, that was really after college. I studied economics at college or university, and really, I would say that was the path that put me on where I am today. Economics can be an art or a science. We studied the science of economics, and it's really the science of how economies function, at the top level, macro, and at the bottom level, micro, and in the middle, meso. And along the way, investing really just captured my imagination.
I think that's absolutely impeccable. I guess now going back to the version of you in elementary school, what traits of your younger self do you think make you a successful investor today?
So I would say definitely being curious about the environment around, how things essentially are related. When we think about things that are made from the input stage to the final output, I think that level of being just very curious is something I've taken from the elementary version of me through to the version of me that you see today.
Yeah, I think it's a perfect job for curiosity for sure. I guess it's one thing to be an investor, but it's another thing to be an author. And I just was wondering what kind of sparked your interest into writing books. You've written and added to several books. I didn't even name all of them. I named a few of them. And you've like contributed to curriculums for studies for investing, like such as the Kaya. So I guess kind of what sparked your interest in writing children's book in particular?
I'd say with a children's book, and I'd be curious to get what inspired you, Nicolette. I feel that maybe there's similar themes, but really, the more I dove into investing and the markets and so on, I really noticed that there was a big difference between those of us that knew and those of us that didn't, right? And a lot of the time, I feel that it's not a question of you or I being any smarter or any more articulate than anyone else. It's just a conscious decision that we made in our careers or in our passions and how we learn to learn more about money and finance. So really during the pandemic, it was just a very constructive way, I guess, while the whole family was cramped together. It was just a constructive way to also decode what I was doing to my kids. During the pandemic, 3 children, my spouse and I. It was just again a very constructive way of bringing to life what I do, but then bringing it in a way that was digestible to my kids. And goes back to just being curious, right? Whether it's a super technical level, whether it's a super high level, or somewhere in between. I feel that the really interesting and enjoyable thing about what we do is, depending on your audience, you can kind of switch on and switch off, like just how much you want to get in the weeds. And being able to take it to the basics was really enjoyable for me. And it's just nice to know that, beyond us, there's just this conveyor belt of young minds that are ready to be curious, ready to be molded, and they're going to embrace, the challenges as well as the exciting things to learn in our financial system.
Yeah, I think I relate to that in many ways, but your book is just impeccable because it's ABCs and those it's just such a translatable thing. And when I first got your book, I was like, wow, this is so smart to break it down for ABCs because kids learn their ABCs, like just translate that into investment language. And I really enjoyed going through that, especially with my mom, who's a kindergarten teacher, because she was like, oh wow, like this is awesome.
Oh, that's
Um,
great.
and I just think it's a great resource. So for those of you like who haven't checked it out yet, please go check it out. I guess going back to like your role as a managing director, excuse me, for an investment consulting firm, I feel like a lot of people like kind of understand investing at like a surface level, but they might not know what an investment consultant does, which is both of yours and my line of work. And then the next layer of that, my second question would be breaking down what a managing director does.
Mhm. Absolutely. So starting with the role as an investment consultant, from a very high level or basic level, we are a trusted advisor to a company. It could be a city, it can be a state, it can be a wealthy family. We provide them with an outline and a roadmap within which we manage their money. How we manage the money is dependent on how the relationship has been laid out and struck. So there'll be some instances where soup to nuts, from A to Z, we're in charge of everything, whether it's picking the managers, rebalancing, changing over the portfolio. There's other relationships that are more collaborative. But again, I think to really cut it short, it's really just getting to be that trusted person that advises on the most prudent or the most appropriate way to invest any pool of money for a client. Taking it to the actual title or the role, it's funny, right? In your career, you spend a lot of time climbing up and getting designations and doing things to get a title. You get the title, and then you spend half the time saying, well, the title doesn't mean anything. And I would just say this, as a partner of the firm, along with 24 other partners, the goal here is to further the mission of having institutional as well as personal clients that are just more than satisfied with the advice that they've been given. Putting out, just a thought leadership in the marketplace. So reading your book, Stock Explorer, was really exciting. It's nice to gel with people that not view the world the same way because your book is very different, but at the same time, the mission is still very, very similar to the ABCs. So really bringing it back to the role of a managing director, keep your clients happy, which is a sound asset allocation, which your book, I think, does a nice job talking about, where you talk about the different types of stocks available, the little owl talking about value stocks and the moat and all that good stuff. So for those of you listening, please pick up Stock Explorer, great book. But beyond giving advice around what's in the portfolio, making sure that we're up to date on trends, right? So if interest rates are going up, as we all know, the Federal Reserve has been controlling interest rates at the shorter end of the yield curve, making sure that portfolios are adequately structured to accommodate what that means. And then if the equity market sells off, stocks sell off, having a sense of what that would mean for portfolios. So thought leadership, building strong relationships in the marketplace, and thought leadership. I would say that those are the key elements of the role as a managing director.
Thank you. And I feel like you're being modest about it. Being a managing director is a really big deal, guys. Like that is probably one of the highest levels you can reach in the industry. So I know it's just a title, but at the end of the day, it's a big accomplishment. And on top of that, you've done a lot in your career. So I just wanted to highlight that.
Well, I appreciate that. Thank you.
I guess going into the investment side of things, I'd be curious to know what your favorite investment is.
I'm stumped by that. Uh, I don't have one only because I feel, and it's kind of like asking me who my favorite child is, right? I have three children. All of them are amazing. All of them are equally a source of enjoyment for me, just in different ways. And I feel that asset classes are very similar, where I love equities. I love the fact that you can count on a good degree of mean reversion you can count on accessing, equities in a very cost-effective, very simple way. Fixed income, while it's not as exciting, I feel that it's always the quiet one that's overlooked, and I feel that that has an important role in a portfolio. And then alternatives, I feel that getting down to truly understanding what's under the hood and what's appropriate for a client just makes you that much smarter or that much better. So unfortunately, I can't pick one. I would have to go with all of them because they all have a role to play.
No, that's certainly fair enough. I feel like it's hard to pick one because you want to be diversified at the end of the day. And I like the analogy of your children because they are like your children, and you're like, well, I just can't pick one. They're all equally like they're there for a reason. I
Exactly.
guess if you just wanted to like elaborate on one, you can pick any one. It doesn't necessarily have to be your favorite. How would you explain that one to your kids if you had to pick
Yeah,
one asset class, for example?
yeah, absolutely. I've actually been talking to my kids quite a bit about investing, and I think for whatever reason, real estate is one area that's very easy to explain, and then followed by real estate, I would say equities are a lot easier to explain, right? Because with real estate, part of the attractiveness of that is it's very easy to explain to anyone of any age, right? Real estate, it's about the location, it's about the price or the valuation, and then you make a decision based off the location and the price, whether there's potential for appreciation in the future, or if you can get strong cash flow from having that as a investment property or as a property in a portfolio, as the most high level basic example. And equities, my kids, they know about Apple, they know, Roku TV, they know about tech companies. They've even asked, just pivoting a little bit, this is where I have to be hip as an older dad, right? They'll ask me about crypto and NFTs, so I can give them a quick comparison about crypto and NFTs and how that's very different to the equity side of things or the real estate side of things. So a hard asset, a real asset is a really nice comparison to, let's say, an NFT. And then on the equity side of things, you have a very liquid market, you have a lot of benchmarks, you have a lot of data, and that's a good comparison to, okay, the world of crypto, which is still being developed. So I would say that my kids, my four kids, they have to hear all these things from me because I find them exciting, and I find it to be a really, really big blessing that this is what I get to do for them. I get to break things down, analyze them, and talk to people for it. It doesn't get much better than that.
Yeah, no, I think that was great. And it's a great explanation of like one extreme to another, like hard assets, the things you could physically go out and see, like a bridge or
Yep.
apartment complexes or corporate buildings. And it's just interesting. Like every time there's something with that, I feel like it's been real assets have been really topical this past year. I read a couple white papers on that, and I'm like, wow, I never read this much about real assets before this
Oh,
year.
absolutely. A little bit of inflation will do that.
Yeah, and I just feel like it's one of those things that, like, going back to the younger version, like when I was with my dad, for example, my dad's into like building things. He was an electrician, and just being in the car with him, he was like, "See, construction, like when construction's booming, the economy's doing well. When construction isn't booming, the economy isn't doing well." It's just things you can visibly see as a kid, like, oh, they're building things. Things are in motion, the economy's doing really well versus when they're not building, it's like, oh, we probably should be worried. There's not as much going on. There's not
Absolutely.
as much growth. I guess, going back to the younger version of you, what advice would you give yourself about all these asset classes? I mean, I guess it's kind of hard to tie back to, but if you had to give yourself one tidbit of advice and looking at all these asset classes and deciding where should I put more of my money versus less of my money or something like that.
So there's definitely going to be the caveat. I don't know if you have to disclaim this, but kids, there is no advice here. So I'm not giving you advice. A little disclaimer. But going back to my younger self, I think wow, if I could have gone back and put my pocket money in Apple stock back in the 80s, uh, much different conversation we'd be having today. So I feel that for anyone that's learning about investing, whether these companies are still relevant 20, 30, 50 years from now. That's up for debate, but I feel that just going back and looking at how certain companies have just risen to the point of dominance. So again, Apple would be one of them. If I could go back and invest in Apple, absolutely. Amazon, I'm a Gen Xer, so I'm old enough to know better, and it went through this weird phase of people questioning whether people would buy things on the internet. But being a little braver and perhaps investing with the Amazons and so on. So I think that would be the advice. Just continue to be curious, continue to be thoughtful about business models and different companies, and then also don't be too scared of things that seem a little bit too new. I mentioned NFTs. I would say that's an extreme example of something that's very new, whereas a technology company, a Microsoft, an Apple, we go back 30, 40 years ago, these were cutting edge companies. And again, it would have been great if I had that crystal ball as a kid to allocate my money to those companies.
Oh, thank you so much. That's great advice. And yeah, the crypto NFT side of it is, I don't know, it's getting there, but I feel like you have kids, so you probably get more of it than I would over here. But yeah, no, my husband was like, "Oh, you should look into this one NFT," and I was like, "Oh, I don't know enough about NFTs." And then it blew up, and I was like, "Oh, probably should have read into it a bit more and not just like completely disregarded it." It's an NFT.
Right. Well, the strange thing there is, and without disclosing too much, it might have blown up, but it could have been there could have been a million reasons behind the blow up, and
Yeah.
ultimately, once you get the reason behind the blow up, you may actually be patting yourself on the back for not moving so quickly on that.
No, it's true. I feel like a lot of it right now is like if celebrities are on board and it's not anything that you can really measure. So that's where I have like a bit of hesitation with it. And it's one of those things. So it was funny you said it. I was like, oh, and then in hindsight, it's like worth 10 times more than it was before, but it's all just the hype of celebrities being on
Abso-
board and all the craze and that people see online. But thank you so much. I guess before I conclude, is there any last words of wisdom that you would like to share with the audience today?
Words of wisdom. I'm not sure about that, but I will say this is great for those people listening, for those people taking the time to really just learn about the stock market, investing. View this, and I did this with my kids. View this as something that you're going to do throughout your life. Something as simple as I don't know if Pokemon is still a thing, but something as simple as buying your Pokemon cards and looking at the valuations of the rare cards versus the more common cards. All of these things are part of thinking financially or thinking in an investment way. So please don't be intimidated by it. Nicolette, you shared that your father is an electrician as an example. But whatever anyone does, whatever our parents do, it is tied into finance one way or another, right? So even though an electrician is not a stockbroker, your father was aware about the economy and how the economy is doing and how his sector is going to do as a result of the economy. So again, talk to your parents about it, and find out what they do for a living, find out how the investment markets impact what they do, find out why your parents do invest or don't invest, and normalize the conversations, because the more we can make it an everyday thing, the more we can talk about why people invest, why people buy houses, or why mortgages don't make sense, or why tax reform in this sector would make sense, and so on. It just empowers more and more people to participate in this great system that we have. So I think that's my parting thought. Oh, pick up your book as well. I think Stock Explorer, the Moat example, is really good. Your little comic book. I'm a huge comic book nerd,
Oh
so
yeah.
I love your comic book little script.
Thank
So
you.
continue to dial in with Nicolette stuff, and that's my advice for today. And I'm sticking with it.
Well, thank you so much, Kweku. I appreciate it. And also pick up his books. His books are also very, very good, as I said earlier. And yeah, thanks, guys. Thanks for tuning in. Bye bye.
Thanks, everyone.